you know what Canada needs? More money. And everyone's like, what do you mean more money? Where's the extra money going to come from? Like, more money from where? And then the guy's like, I don't know, just more money. Canada just needs more money. Right? Like, that's what I'm trying to figure out, right? I'm trying to figure out how to get us more money. Hey, what's up, you guys? Welcome back to yet another episode of Zillennial Money. I am always your host, Andy, and the greatest host of all the podcasts in the world. And let me toss it to the guys for a brief intro.
Hey, what's going on, guys? It's Dominic once again. So be sure to like, comment, and subscribe to this channel, as well as the Clips channel, and enjoy.
Hey guys, Tristan here. We've got a great show lined up for you today, as always. So I'll toss it back to Andy to take it away.
Yeah, for sure. So we do have a loaded docket. So why don't we not waste any more time and jump right into it? So the first story of tonight is Bitcoin, or specifically Bitcoin transaction fees post-halving. So I'm sure those of you who have been following the news around Bitcoin have noticed that recently we had a big news event called the Bitcoin halving. So basically it happens around every 4 years where the Bitcoin block subsidy gets cut in half. Just as a brief explainer, each block, a block is a group of transactions. So whenever you send a transaction on the Bitcoin network, it gets grouped with other people's transactions and it has to fit inside a block. And then these miners go to work to try and find this one specific number that will solve this equation. And if you solve the equation, then you can attach the block to the previous block, aka the blockchain. And then if you manage to do that, then you get rewarded with Bitcoin. So the reward before was 6.25 Bitcoin per block. But after the halving last week, it has been cut in half to 3.125 Bitcoin per block. And in another 4 years, in 2028, it'll get cut in half again. But that's going to be further down the line. So right now, people were a little bit concerned about Bitcoin miners specifically, like these mining companies, just because, when the block reward gets cut in half, theoretically, the revenue drops by half. Now, in reality, this has not been true, actually, because there's also another component to what miners make, which is the transaction fees. So besides the block reward, there's also transaction fees that goes into every Bitcoin transaction. And within the block, it gets aggregated, and then that plus the subsidy forms a total reward. So I prepared this graphic. If you guys look on the docket, so CleanSpark, which is CLSK, which is one of the bigger miners. So I took this screenshot, I think on April 23rd, which was yesterday night. And for CleanSpark, the block reward, the average reward they've been averaging for the past few days has been 5.9 Bitcoin per block, which is which is a lot, right? Because the transaction fees absolutely skyrocketed, even though the subsidy got cut in half. So it's almost like they're almost making as much as 6.25 Bitcoin per block as before, right? But it seems like the halving didn't really impact the bottom line nearly as much as people thought it would. And just to back that up a little bit more, if you guys look at the second graphic, this screenshot I also took around the same time, I think yesterday night. And for medium priority transaction, it costs like almost $20. And those are US dollars, by the way. So it almost costs $20 per transaction. So I had a look at the fees right before the show. And I think it has dropped down to below $10 per transaction now. But still, we've seen consistently high transaction fees. So this is good news for miners, but maybe it's not so good news if you're actually trying to send a Bitcoin transaction on the Bitcoin blockchain, because it does cost you significantly more now. So the third screenshot, if you guys take a look at that, that shows like the middle bolded number on the blocks. That shows you the total fees paid. So that does not include the Bitcoin subsidy, which again, after the halving, it's gone down to 3.125 Bitcoin per block. So it does not show, it does not include that subsidy. So it's just the transaction fee alone is averaging around 2.5 to 2 to 2.5, sometimes a little bit more than that, 2.5 even, Bitcoin per block. So the miners, they're raking it in so far, and it seems like if you look at the stock price of all the miners, they've gone up quite a bit throughout the past few days. I think that it's partly to do with the fears of miners going bankrupt kind of easing, because it seems like they're making a lot of money still, even though the reward has been cut in half. Let me toss the question to you guys. So the question, I guess, is what do you guys think about the future of miners, of these mining companies? And do you think that this like high transaction fee is going to last, or do you think it's just a temporary thing and it's going to go back down to $1 or $2 per transaction again, like how it was slightly before the halving, or how it is kind of usually? So yeah, take it away, guys.
I'll just do it from like a more like human perspective. I think this too shall pass. Like what I'm trying to say is like everything kind of seems like a little difficult right now. Like miners, whatever, since the halving, it's all just hype. So I'm sure like over a progressive amount of time, like everything will be okay. And then, for example, like these fees that are like really expensive right now is surrounding that hype. So once this hype like surpasses, like probably will be okay. And then, sorry, what was your first question again?
Yeah, I was just asking, like, what do you think about kind of the future prospects of mining? Like, do you think like the miners can survive with much lower much lower block subsidies? Do you think that like this model of relying on transaction fees as a large part of the income is a sustainable path for miners going forward, or do you think this is just hype and is going to die down, and like you better sell the miners before before their like incomes crash and all that stuff?
Well, I think like all successful companies and like mining companies specifically for cryptocurrencies are most likely going to find a way around this. I think that like if there's a will, there's a way, and like they'll come to a plan. Maybe it won't be like super instantly, but over time they'll develop something to be able to work around things. Like for example, there's like shrinkflation happening, inflation, but companies are finding ways to make money. So like if Amazon or Jeff Bezos can find ways to still successfully profit during like tough times, I'm sure these mining companies will be able to find a way too. So I'm sure all is good.
Yeah, and I'm curious to hear what you think, Tristan, because you're the resident mining expert over here. So yeah, take it away.
Something like that. Yeah, so I think that the miners definitely have, well, I think one of the most important things we have to remember is that mining is required for the Bitcoin, for Bitcoin to work, basically. So there has to be miners, and there has to be an incentive for the miners to mine, right? So, and I suspect that as we continue to increase in the value of Bitcoin, those fees will continue to increase either way. So their ability to sustain themselves on the fees, eventually, maybe they'll be able to become more so sustained by the fees than the normal block reward. I think that's possible. Again, there is always risk involved in that, and I think if I think that the Bitcoin miners, their real heyday will be before the point where they need to sustain themselves on transaction fees, right? Like I don't think you're going to be seeing these scenarios where the Bitcoin miners like substantially increase in value in a very short amount of time the way we have been seeing. I don't think you'll see that anymore with if we're in a scenario where transaction fees have become their primary source of revenue. Since at that point, I think that the Bitcoin will have stabilized a lot more in terms of its volatility, and once that happens, the miners themselves will also stabilize. So it's a bit of a I think that there will be definitely some winners and losers on that front. Like there will be some that will be unable to sustain the costs of continuing business, but I think that there will be definitely still miners kicking around, and the transaction fees will be where they make their money at that point. So I think that being said, I think that for me at least, the minor plays are more interesting as a kind of a periodic swing, more of a swing trade in that sense, where it's like you want to, or at least in my opinion, and this is not financial advice, by the way. It's something that, holding for the long time, you're going to be dealing with a lot more volatility. Whereas if you buy and sell the positions periodically, you can take a lot of profits while still avoiding some of the volatility on the downside. So I think that they're definitely still pretty compelling. And I think that the fact that they are getting such good rewards still is pretty confidence boosting on the longevity of the miners in general. So that's just about it.
Talk about swing trading. So like, do you want to discuss a little bit about kind of your maybe a grand strategy as to like what you're thinking of, like how long you're thinking of holding each miner, and like what kind of price targets you're looking at for like specific miners, or if you don't want to talk about specific ones, you can talk about the general space in general, like what kind of returns you're kind of expecting and stuff like that.
Yeah, so with regards to, I'll kind of talk about the space in general first and foremost, because I think that's more of the more generally speaking is more valuable from a industry perspective. And I think that the miners have a lot of room to run up. Currently, I think the evaluation on most of, many of them are pretty tame, and that in that regard there's a lot of room for them to go on the upside. But at the same time, I know that when we have a crypto winter, presumably in most likely in the year of 2026 to 2077, somewhere in that range, that these miners will likely not be doing very well in that time frame, because if the amount of people buying Bitcoin has been reduced, the price of Bitcoin is falling, even though I don't expect it to fall below its all-time highs now, but it still would be a substantial decrease from a theoretical new all-time high that it'll be approaching. So in that regard, in my perspective, the Bitcoin miners represent the best opportunity is for you to buy the Bitcoin miners and sell them in 2025. Ideally, so in the past few cycles, they've had kind of a peak towards the end of 2025, but there's been local peaks periodically before there that have been relatively close. And I know past performance doesn't predict the future, but in my opinion, Bitcoin will take some time to run up to a new all-time high, and that's when you want to be in the miners, is when you're on the run up. And now that the Bitcoin miners have proven that they can survive the halving, I think that they'll get more recorrelated with Bitcoin again. And in that regard, I think that the miners will represent like the best trade scenario is like you would hold the miners until 2025 and then basically exit the position at some point in there. And my expectations is there'll be a substantial increase because I think there's a lot of room for them to grow within the space, and there's a lot of money that will potentially flow into that area because of Bitcoin's performance. So if Bitcoin continues on its trajectory that it's had for the past several cycles, where it hits all-time highs again in the new post-halving, I think that the Bitcoin miners will follow suit and hit even higher highs again. And even from that regard, like most of the miners, to get back to the evaluation they would have had when Bitcoin was at its all-time high in 2021, most of the current miners are already looking at a double, like to get to that spot again. So I'm not trying to say that they will double again, but I think that that represents an area where there's a significant opportunity from a risk to reward perspective, because if you're buying companies that are unlikely to go bankrupt and are currently profitable, then the risk to your portfolio is much lower than the potential reward that I can foresee, in the sense of like, I don't see, if the miners go down, I don't see them going down an absurd amount. Whereas if they go up, I expect them to go up a lot more. And that's kind of where I'm at, is that I think that they represent a really good scenario from that risk to reward perspective because of those factors.
Yeah, Dom, you have any thoughts? I know you have some Bitcoin mining stocks as well, right? So do you have like a grand strategy, an exit plan, price targets, anything like that?
So for transparency, at this time, I currently own strictly bit farms just as a spec play. It's basically just me having a little bit of fun and finding ways to just boost the amount of money that I have in my FHSA, which is kind of like a fun play. I don't have a ton of bit farms, so it's not going to be the most heartbreaking thing if it goes down per se. But if it goes up, I'm definitely going to ride the wave. I think 5, around the price target of 5, I'll consider like selling perhaps, but I know some people in here might disagree with that. Like, I know that for a fact. I know a host here. No, I'm playing. Yeah, only time will tell. But I actually do have some positions in my TFSA too. But again, yeah, only time will tell. Once we hit that 5, I'll probably change my mind and go like, well, it's already going up. It might go up more, so it might not sell. So who knows? Honestly, who knows?
Okay, so the way I think about it is that take profits if you want, right? Because ain't nobody ever went broke taking a profit. So yeah, like if it hits your target, then by all means, like take profits, and I won't judge you. But the way I think about it is this, right? So with Bitcoin miners, you got to understand the reason why they're considered a leverage play on Bitcoin. And this is due to the fact that they acquire Bitcoin at the marginal cost of electricity. So what do I mean by that, right? So for example, if let's say you want to buy Bitcoin, right? So Bitcoin is at around 65,000 US dollars right now, right? So if you want to buy a Bitcoin, you have to pay $65,000. But if you're a Bitcoin miner and it costs you, let's say, I don't know, $30,000 per Bitcoin to mine each Bitcoin, then you can acquire that Bitcoin for essentially $30,000, and only the miners have that ability, right? If you were to go on the open market, you would have to buy the Bitcoin at full price. Versus if you're a miner and your mining costs are below what the market price is, then you're able to get that Bitcoin for much, much cheaper. Now, this was before the halving. I think most miners were sitting around maybe like $30,000 to $40,000 per Bitcoin in terms of each the per Bitcoin electricity cost. Now after the halving, like just logically it would double, right? But it's not exactly a double because once again I said there's like other factors like the transaction fees that will help bring down the average because the miners are also making money from the transaction fees. But let's ignore the transaction fees for now and let's just say that a miner is making it was spending $40,000 per Bitcoin in terms of electricity, and now they're mining it at $80,000. And right now that just so happens to be above the market price. So maybe that's a reason why some people are jittery. But then again, we're expecting the Bitcoin price to go up very shortly, right? We have a lot of good news coming down the pipeline. I know Hong Kong just approved Bitcoin ETFs, and they're set to trade on April 30th, which is next week. So once that gets started, and then I think there's also another piece of news that Grayscale, GBTC, the company that runs GBTC, they're opening up a smaller ETF, which has much lower fees. I think they're only charging 15 basis points for their management fee on the small ETF. So that's going to be another catalyst because there's supposedly going to be a way for GBTC shareholders to swap their GBTC shares into the small ETF, and they'll save a lot of fees, right? Because right now it's 150 basis points on GBTC for the management fee. They're going to be able to lower that literally by 10x, like instantly when they swap into the small ETF. So 150 to 15 basis points. So I feel like a lot of people are going to use that. And it's also, it doesn't create a taxable event when they swap the shares. So I feel like a lot of people are going to take them up on that offer, which means that GBTC can stop dumping shares and dumping Bitcoin onto the market finally, right? And I think that actually the small ETF is not out yet. And today we had another big negative outflow day for GBTC. And I think that's also what contributed to Bitcoin's price going down. But yeah, my point is that I feel like all the negative catalysts like GBTC dumping, that's temporary, right? That's going to end at some point because the beauty of Bitcoin is that it's limited in supply. So they can't just dump Bitcoin infinitely because they're going to run out at some point, right? They've already lost half of their BTC holdings since they converted to an ETF in January. So the most they could do is dump for another 3 to 4 months at the current rate. And we know they're not going to let it go to zero because they don't make any money if it goes to zero, right? Like their BTC holdings, I mean, like BTC will be fine even if they dump their entire bag, but the price might be temporarily suppressed if they continue their dump. But yeah, my point is that all these negative catalysts are going to be over soon, and I see a lot of positive catalysts, and maybe the average price that miners are able to mine Bitcoin is at 80K, but I think we're going to smash through that very soon. And once we do, and once the miners become truly in profit again on a per Bitcoin basis, then I think you're going to see that big run up in miners, where because of just all the miners buying machines and expanding their operations, you're going to find that it's going to be super hard for new companies and companies that haven't made their move yet to buy Bitcoin mining machines because those machines are going to get sold out, right? And this is exactly, and I'm not making this up, this is exactly what happened in 2021 and have no reason to believe that this time is going to be different, right? So we're going to see a big run up in Bitcoin's price, and then all the machines are going to get sold out, and then anyone who hasn't gone into the mining space, who hasn't bought the machines, they're going to get left behind. And the current miners that I'm in, for example, CleanSpark and Bitfarms are the big two that I'm in. They've already announced their plans to expand their hash rate. They've already acquired the machines, or they have options to acquire the machines. They've already ordered them. So they'll be able to guarantee themselves a supply of new machines coming in. So yeah, I mean, overall, I'm mega bullish on the Bitcoin mining space. And I think that in terms of price target, if I'm expecting Bitcoin to, let's say, do 4x, right? So from 60K to 240K, which sounds ridiculous, by the way, but honestly, I wouldn't be surprised if it hits kind of that case, right? Because 200K is around my base case, and I think I'm being conservative here for the cycle top, not like next month or next week, but the entire cycle top. Then I think that Bitcoin miners are probably easily a 2x again on top of that, right? So if Bitcoin does a 4x, then I expect Bitcoin miners to do an 8x. And usually this, and again, I'm not making this up, this is what happened last cycle as well, right? And the cycle before that. So this is usually how these things shake out. And yeah, like if miners do an 8x, if CleanSpark or Bitfarms does an 8x, I'm going to be a very happy camper. So yeah, anyways, that's all my thoughts around the Bitcoin mining story. So if you guys have any thoughts, now's the time to jump in. If not, we can move on to our next story. All right, great. Let's move on to our next story. So our next story is about Tesla. So Tesla just had their earnings report recently, and they missed both on EPS and on revenue, yet the stock skyrocketed after hours, which is really strange if you're new to the market, right? Because you kind of maybe expect a stock to fall if they miss earnings. However, what you have to understand is that the stock market is forward looking, right? So there were a lot of things that Tesla announced that the market really liked. And I think that that's why the market is rewarding Tesla stock. And by the way, Tesla stock has been doing terribly all year. So maybe that's part of the reason. It's just fallen so much that you're really going to need like some extremely bad news to push it down even further. So maybe just like a sympathy bounce is part of the equation as well, right? So again, I'm totally biased because I'm a big Tesla shareholder. I don't know if any of you are, but yeah, like I'm like super impressed by what they announced on the like earnings call and what they had to say. So let's just spend maybe the next 5 minutes quickly going through some of the highlights. So number one, they announced that they're basically going all in on the Robotaxi, and this is like Elon's kind of vision on what Tesla is going to do, like on what Tesla should focus on in the immediate future, which is to really master FSD and push out this Robotaxi. And they scheduled a Robotaxi day on August the 8th. So we're, at least I'm excited to see what they're going to announce. So they announced kind of like a mock-up idea of what the Robotaxi is going to look like, right? So the idea is that, let's say if you have a Tesla that you can turn into a Robotaxi, then you press a button and then it'll show, it's kind of like Uber, right? Like it'll show you where the car is, and you can set it to who it can pick up, right? So let's say you don't want like random people like riding your Tesla, then you can just set it to only be accessible by family and friends and people on your contacts list or something like that. So let's say if your friend is coming to visit you and you need to go to the airport to pick them up, well then maybe you can just send the car by itself and you don't have to go. So that's like one potential big use case. Or if you want to turn it into a Robotaxi, but you're kind of afraid of like people, throwing up in your car and all that stuff, you can set it to only 5-star riders. It's kind of like Uber, right? So there's going to be a rating system as well. So that's kind of the idea behind the app. Yeah, we're going to see like how far they get or how close they get to this when they announce their stuff on August the 8th. And just to illustrate how far Tesla has gone in their mission to achieve full FSD or full self-driving, they have accumulated 1.2 billion FSD miles. So for those of you who don't know what this is, an FSD mile is basically like whenever FSD is engaged and turned on and the car is driving itself, that like for each mile that the car is doing that, it counts as an FSD mile, right? And then you add up all the FSD miles cumulatively in aggregate across everyone all over the world who are using FSD, then the number has now eclipsed 1.2 billion miles driven on FSD. And the little like red piece at the end where it really spikes up, that's FSD version 12, which has been kind of touted as the ChatGPT moment of FSD, where apparently I haven't tried it myself, but I have tried FSD 11, and 11 was a little bit wonky, to be honest, right? Like I shared my experience actually in a previous episode when it was on my trip to Quebec, where me and some buddies, we rented this Tesla with FSD version 11, and it was kind of wonky at times, but 80-90% there, I would say. But apparently FSD 12 is like a big leap over 11, so it's a much bigger leap than from 10 to 11, right? So yeah, basically they stripped out the code base and replaced a rules-based system, which is called heuristics, with neural networks. So neural networks is kind of imitating how like an actual human brain would work, versus heuristics is kind of like a list of rules, is like if-then statements. So neural networks are the way to go according to Elon, and apparently FSD 12 is, and apparently he's right, because FSD 12 is a lot better. So that little spike at the end there is FSD 12 miles. And yeah, just to go through kind of the general vision, there was a Reuters report earlier as well saying that the Model 2, like the cheap, I think it was like $25,000 Tesla, there was a Reuters report saying that the Model 2 was canceled. But then Elon kind of responded to that report saying that it was fake news, and the Model 2 is not canceled. But I think maybe they're just not super focused on it right now because they're trying to nail FSD. But eventually it will be coming. And they also implied that there are other like cars, there are other products in the work. So probably like a Tesla van or something like that is what is rumored. That's going to be coming eventually. Just not like, soon, but it will be a thing eventually. And then regarding the robot, so the robot is called Optimus, kind of like Optimus Prime is like a transformer kind of allusion to that. So the Optimus robot is Tesla's, humanoid robot, and apparently it's going to be able to do useful work as of later this year, and potential to be able to be sold to other companies in 2025. At least that's what Elon is implying. So we'll see if that happens, but apparently they're making some good progress on the Optimus robot as well. And this is kind of like the next S curve, right, of Tesla's growth, where if you think about any job that requires, manual labor, if we can replace that with a robot, then, that's a much bigger market than cars, right? So people think of Tesla as a car company, but if they really nail the robotics part, then Tesla's like way beyond cars. It's like when Apple made the leap from computers to the iPhone, right? So like the mobile market is like way bigger than just like laptops and stuff like that, right? So it's kind of like an idea like that. If they can nail the Optimus robot, then that would be the next big growth curve for Tesla. So anyways, those are just, I don't have time to go through everything, but those are just kind of some of the highlights. And as you can see from the next graphic, the stock market seemed to kind of like what they announced, and then the stock went up 13% after hours, and I believe it did kind of stay at that level throughout the day during the trading day. And lastly, before I toss it back to you guys, I just want to highlight some of the naysayers on Tesla and how like ridiculous some people are, right? So there's this channel on X called FUD News, and the entire existence, the reason, the essence of the of this channel is to just basically shit on Tesla, and some of it's maybe a little bit reasonable, most of it's not reasonable. And this is a graphic that they posted, and it says the bigger they get, the harder they fall. The shorts are ready. So basically, they just posted a chart of Tesla going up, and they just drew an arrow going down for no reason. There's no like it's not even technical analysis. Like you can't even call this technical analysis. He literally just drew an arrow going down. So like I was like making fun of this because this is kind of like how Bitcoin bears think sometimes, right? So they look at a chart of, let's say, Bitcoin, and they just want Bitcoin to go down because they just, for whatever reason, hate Bitcoin. So they take a chart of Bitcoin, say it's at like 67,000, and they draw an arrow down to zero. And there's no technical analysis, and there's no like any analysis. It's just, I want it to go down to zero. Right now it's at 69K or 67K or whatever. I just want it to go down to zero. So I just draw an arrow down. So this is what like the Tesla bears think. And I hope none of you are a Tesla bear. And if you are, I'm sorry I offended you. But yeah, anyways, let me pass it back to you guys now. So like, what do you guys think about what Tesla announced? Are you excited for anything? Do you think it's gonna work, or like just how do you feel about Tesla in general as of right now?
Okay, I'll answer the last question, or the last thing you mentioned first. So I do really like Tesla. I've been a shareholder for a hot minute. I was taking a look at my phone, and my average cost is around 150. I've had the stock since when, like 2021, 2022. I can't remember the exact time frame, but ever since I've been holding, historically it's been holding pretty good, like in terms of value. It's volatile, yeah, sure, but with the things that you're saying about Tesla, like I do believe that in the future they will do well, and for that I'm going to be like bullish on Tesla and still continue to hold on as like a kind of like a play. I think a lot of the things that they're actually trying to do and implement are really sweet as well, like that taxi thing that I guess Elon wants to bring into existence. I know they do things like this already in San Francisco. I think I've seen a few videos about it, so I think it's pretty realistic if Tesla did their own take on it as well. And I think the Optimus Prime, et cetera stuff is really cool too. So with so much coming in the future, I see why shareholders or like people are interested in buying the stock, and then that's why in recent time the stock went back up to like the 160s, which is good for us. I don't know if Tristan's a shareholder, but at least I am, so I do enjoy that a lot. And then the last thing I'll try to mention too as well is these shorters, these negative Nancy's, whatever you want to call them. Yeah, you're right. There's like no technical analysis. You know what, bro? It's gonna drop because I said so. Well, gee, like, what's that gonna do for any of us? Like, I don't think that's like, viable by any means whatsoever. I think they just want what they want and can't like justify like what they want. Like it's just like it's not technical enough. There's nothing behind it, and I think it's just kind of dumb. But whatever. Hey, that is what it is. And yeah, that's my opinion. I'm definitely a bull for Tesla, and I'm in for the long term. So yeah.
I think they should put their money where their mouth is worth and show us the screenshots of them buying shorts. Do it. Show me you actually shorting Tesla.
We want that proof.
Yeah, I want proof. Because I feel like they're full of shit. To be frank, I think they're just making stuff up that fits a narrative that they want to have. With regards to the short folks, like there's clearly their reasoning for Tesla to decrease in value is not very clear. And to be clear, there is a fairly reasonable argument that could be made that Tesla is overvalued. You could make that argument, and there are some metrics where you could say, yes, this is theoretically potentially overvalued, but at the same time it hasn't really been acting like it's overvalued. And if you look at their growth plans, their long-term projections are pretty bullish. That being said, I am a shareholder. I am also pretty bullish. It's not a major position in my portfolio, but it is present. I don't know how I feel about the taxi thing. I feel like it's just a gimmick. I don't think it will bring very much value in overall. I feel like Uber and Lyft have already kind of disrupted that space. I don't know why Tesla is going to be doing something so different that is so beneficial. And, honestly, if I was someone who owned a Tesla, I sure as hell would not be doing it, because I would not want to risk my Tesla either way, even if it's only 5-star people. I wouldn't want to risk my, $60,000 car minimum car, to just, what if the person didn't mean to do something? Maybe they just spilled their food. They didn't mean to spill their food, like it's not, I don't see why, I don't see it being super worth it. It just seems kind of like a gimmick, honestly. But they're full self-driving, they're making good progress on that. I'm sure that eventually that'll be a thing. It's just it's always an ongoing process. So the fact that they're making progress still is definitely good for Tesla, and it's definitely a good factor with regards to the fact that they are significantly further ahead of their competition in that regard. So I think I'm pretty clearly bullish on Tesla. It's just I'm not like super duper duper bullish on it, in the sense of like it's not my sole position. You're right.
Yeah, so I think that the fundamental question that you have to be asking yourself when looking at Tesla is Tesla a car company, or is it a software company, or is it a tech company, so to speak, right? Because if, like, I get where some of the bears are coming from. I don't agree with them, obviously, but a lot of these bears, especially like some of them are, old time Wall Street people, Wall Street analysts who's been looking at Ford and Toyota all their lives. So, Tesla being an automotive company, obviously, like, people are going to ask the automotive analysts, what do they think of Tesla, right? And almost universally, you'll find that the people who have been studying Ford or GM or Toyota for their entire lives, they almost all universally are Tesla bears, right? They don't like Tesla. And you gotta wonder why, right? And the reason why is because they're looking at Tesla through the lens of an automotive company, and they consider Tesla as just a car company and nothing else. So, if you look at Tesla as just the car company, you're probably gonna think that is overvalued, right? Because you can get Ford for like, was it like less than 10 forward PE these days? And probably GM is, I haven't looked at GM, but it's probably around the same, right? And then if you look at Tesla, you're looking at like, I don't know, 30, 40, 50 forward PE. And you're looking at Tesla being like, this is like 4 times or 5 times more expensive on a relative basis than Ford. And they both make cars, right? So if you just look at it through that narrow kind of little gap, then yeah, you're going to think that Tesla is overvalued. But where I'm coming from, I don't look at it that way. I think of Tesla as more akin to like a Google or a Meta, or but even more innovative and disruptive than Google or Meta, right? So, they should be valued. If you want to value Tesla according to their peers, you should put it against like an Amazon or a Google or something like that. And even then, I think, like, you can make an argument that Tesla's going to grow much faster than a Google or a Meta or an Amazon. So maybe you should assign a higher like earnings multiple to that, right? And the reason why I look at it through that lens is, as I've implied earlier, they're doing all this other stuff that are not directly related to cars, right? So, like, yes, full self-driving is related to cars, but it's software, right? And if you look at their robotics business, their Optimus, that has the potential to capture $1 trillion market. Not even kidding, right? So if you just think about how many like manual labor jobs it could replace, right? So I think Tesla is aiming for the Tesla Optimus robot to be under $20,000 when they actually are ready to sell it. So if you're a business owner, and let's say if you run, like, if you're a franchisee and you run a Tim Hortons or a McDonald's, and you can hire a robot that doesn't need like a healthcare plan, that doesn't need like, you know, insurance, that doesn't need like all this, that doesn't need brakes, right? Then I think, and it's like a $20,000 one-time expense versus with a human, you're continuously funding them. I think it's just worth it for business owners to consider at least going down that route. Now, obviously the issue is, can the robot perform as well or better than a human, right? And this is the piece that is kind of like a question mark on whether Tesla can nail. But yeah, I'm bullish on Tesla because my thesis is that they are eventually going to nail that part. And when they do, then, you know, we're talking a matter of not just like 10x, but maybe even like 20x again, right? They've done a 20x before in their stock price from 2019 to 2021. And I think that there could be a 20x again for Tesla if they nail the Optimus robot and FSD and all this stuff, right? So that's piece number one. And in terms of the Robotaxi, it's like, yeah, Tristan, I get your point. It's like, you might not want to do it, right? But I feel like a lot of people would. And like, how is it disruptive compared to Uber, right? So if you look at Uber, like, and Lyft, they're not that profitable. And if you look at the reason why they're not that profitable, it's because the vast majority of their revenue goes to paying the driver, right? Like, even though people complain that, like, you know, Uber drivers, they work really hard and they don't make that much money, it's because there's not that much money to go around in the first place. Like, they're already getting a super high share of the revenue, but you know, it's even then it's not enough. Some people argue because, you know, there's all these like debate on whether or not they should be classified as like contractors or salaried workers or whatever. I'm not gonna get into that, but you know, even that piece is like running into problems, right? So the idea of the Robotaxi is just we eliminate the driver, and if we do, then a taxi would literally be like probably, I don't know, a quarter or a fifth of the cost of whatever you're paying now for an Uber, right? And I think that's the disruptive part that Tesla's gonna nail. And like, again, you might not want to do it personally because you're like, oh, I don't want people to throw up in my, like, you know, $50,000, $60,000 car. But I feel like a lot of people would be able to like would be interested in taking up that offer. And even if you're not, you can be a writer, right? Like, if you're going somewhere and you have the choice between paying $15 for an Uber or like $3 for a Robotaxi, I think you're going to opt for the Robotaxi, right? Assuming that the Robotaxi is safe and all that stuff, and they have FSD nailed. So yeah, anyways, those are just my thoughts. But let me like toss it back to you guys for maybe some counterpoints to what I said.
It's not so much about like counterpoints, but I kind of agree with you. Like, in terms of like the safety, I know a lot of people would probably be skeptical about like Robotaxi and like it being a little too early, but I'm sure like with like, you know, like iPhone, like the first one wasn't the greatest, and et cetera, and so on. Like the first version of anything is always not going to be the best, but over some like, you know, modifications, patches, etc., it should be okay. But of course, it's too early to tell. It's like 2024, maybe 2030 and beyond, it might be a little better, but of course we don't know yet. We'll see.
Yeah, I think on that front, I think the safety factor, you know, I feel like myself and probably a lot of people are not ready to trust full self-driving. And even if it's $3, you know, I'd rather not save $40 but die than spend $40 and get there probably alive. You know, like, humans have been driving cars for a long time. You know, by and large, most people know what the hell they're doing. Like, compared to FSD, which is, you know, still obviously a very early technology that, you know, I don't know if I'm willing to put my life on the line. It's not like buying an iPhone where if it messes up, you know, I chuck it out, right? Or I get rid of it, or, you know, I can just put it away from me, you know, whereas with full self-driving, if it messes up, you know, I'm going out the windshield or something, right? Like, that's not super ideal. So I feel like they need to get they really need to get it locked in, before I think anyone would be, or not anyone, but I think most people would be inclined to use it.
Yeah, no, I totally get that, and I think this is actually something that Elon brought up in the earnings conference call, where he made this analogy. It's like, yeah, it's going to be a process to get people to trust FSD, and we can. There's actually statistics that are out there already right now that FSD is statistically safer than a human driver, right? And this is just due to the simple fact that like FSD, like it's a computer, so it can see stuff at light speed that's coming towards it, and there's more cameras. Like there's only 2 eyes that a driver has, but there's like 16 different cameras all around the car and stuff, and it can think at light speed. But yeah, Tristan, you were gonna say something. You were gonna count.
Yeah. Sample size is what I was gonna say, right? Like, there's not that many Teslas, and let's be real. Like, there's a lot of terrible drivers out there, right?
Yeah.
So even if Tesla looks good because they programmed it to be, pretty good, it doesn't mean that it's better than the average driver on the average road in that specific country. It might be better than like the average driver in, some countries where people are worse drivers, or, some places where people are better drivers, right? Like, I think it's going to really depend on that front, because there's, some countries have much more stringent driving requirements, right?
Yeah. So I mean, just back to the analogy though, right? So regardless of, whether you believe that statistic or not, it's just like, think about the example that Elon brought up was an elevator, right? So back then there used to be like an operator in the elevator. Like when you get in an elevator, like the human like would operate it, and you tell them like what floor you want to go to and all that stuff, right? And then people felt really unsafe when they removed the operator and it became an automatic thing, right? But nowadays it's like, if you get into an elevator and you see that there's a human operator, like, number one, you'd be really like probably taken aback, right? You'd be like, what the hell is this person doing here? And number two, you might actually feel less safe to see that a human is like directing your life, like in the elevator, because like you're so used to elevators being completely automatic, right? And I think that eventually we're going to arrive at the point where that's the case with cars. Like, we're sitting here debating like, oh, is FSD safe? Like, do I trust the computer to drive? Like, I'd much rather trust a human who has like 30 years of driving experience under his belt to drive me to like where I need to go. But I feel like maybe in 30 years, or maybe even a lot less than that, there'll come a day when maybe not us, but like our children's generation will like get in a car and be like, wow, like there's a human driver in this car. I feel so unsafe because like the human could do anything, right? Like, I'd much rather like trust the computer. So like, I think this is going to be a kind of like a learning process, not a learning process, but like a getting used to process, and getting like people to really trust FSD and trust the computer. And even on that front, I think Tesla is so much further ahead compared to any other company on the FSD front, where I think Waymo is like probably the closest one, but then Waymo is like limited to certain mapped out areas where they've really like predefined the routes and stuff like that. So I just think that Tesla is like super far ahead, further ahead compared to the competition on this one. Yeah, I'm like super bullish on the stock as a result. Dom, you're gonna say something?
Yeah, just like maybe a slight tangent, or just kind of unrelated but related. You went to San Fran, right? Did you try that Waymo taxi thing? Or
No, I didn't. I don't think it was available when I went, or at least I didn't. I wasn't there for long enough to like seek it out. But yeah, that's a good point. Maybe next time I'm in San Fran, I'll try to look for one.
Yeah, me too. If I'm over there, me too. Tristan's like, no shots.
Yeah, Tristan, what are you gonna say?
Thank you.
No, you don't want it?
No, thank you. I will much sooner use my legs and walk there than rely on some, I know some people who worked at Tesla, yeah,
And they're like crazy.
I'm not crazy, but
you're like the Jon Snow of FSD. He's like, I don't want it.
I don't want it. No, I could see it being a big thing in the future, but right now, when it comes to early adopting things that could potentially kill me are not things that I'm really into early adopting, Like, you want me to try VR? I'm in. You want me to strap a jetpack to my back? Maybe not.
Also, not a fan of Neuralink then, eh?
Nope, probably wouldn't do that either.
Oh yeah, that's too true.
All right, I don't want to get distracted. We got to move on because we're gonna run out of time, and we have one more story to go for tonight. So our final story of tonight is more news on the federal liberal budget. So I think the video that we did, or the clip of us talking about the federal budget last week, did fairly well, above average. So clearly this is something that people want to hear more about. So here's another story about the liberal budget. So if you guys watched the last video, I'm talking to our audience members now. If you guys watched our last video, you guys would know that we, the Zillennial Crew, are not big fans, let's just say, of this new liberal budget. And it appears that it's not uncalled for, because there are a lot of people that apparently really dislike this new liberal budget. So one of such group is doctors. So let me just read you part of this article that I found, where doctors, the Medical Association, the Canadian Medical Association, has asked the Liberal government to reconsider the capital gains tax change. So for those of you who don't remember what that was, basically there's a capital inclusion rate. There's a capital gains inclusion rate, which is the percentage of your capital gains that gets added to your income tax. So that's how we do capital gains in Canada, is that, let's say if you make $100,000 in capital gains and you made another $100,000 at your job as your salary, well, then the previous rules, if you make 100K in capital gains, the capital inclusion rate is 50%, meaning that 50K of that 100K will get added to your taxable income. So it would be as if you made 50K more at your job. So in total, you would be taxed that year as if you made 150K of income at your job. But what the Liberals are proposing is that if you have capital gains above 250K, the portion that is above 250K will be included at 2/3. So it'll be 66.66% added to your taxable income. So it doesn't sound like it affects a lot of people, right? Because 250K, who has that? But this is what the Liberals are saying, by the way. They're saying that, oh, it's not going to affect that many people. It's fine. It's only going to affect wealthy people. But the issue is that this applies to corporations as well, right? And it also applies to any type of second house. So it doesn't apply to your principal residence, but if you have a second house, if you have a rental property, then chances are, like, given how crazy housing prices are here in Canada, if you bought the house, if you bought your rental property just a few years ago, you've probably made more than 250K in capital gains. So the point is that this affects more people than what the Liberal government would lead you to believe. And this is what the doctors are saying as well. So let me just read you part of the article. So the increase in the so-called inclusion rate would apply to capital gains above 250K for individuals and all capital gains realized by corporations. So we have seen this portrayed by the government as tax fairness for every generation, but realistically, there are certain members of the population that are going to be more impacted. So this is like, I think this was said by one of the experts that they interviewed. Basically the issue, the crux of the issue is that a lot of doctors operate as corporations, as small businesses. So when they make income a lot of the income stays in the corporation, and the corporation can invest the income into, you know, just stocks or other investments. So yeah, it affects the doctors a lot because just because of the particular model of like business that doctors tend to operate in, and yeah, like again, this article says that the expert that they interviewed says that they want to push back on the messaging that physicians are highly paid, given their extensive years of their professional training and the fact that they graduate with substantial debt, right? So this is another factor that we have to keep in mind, that this new policy that the Liberal government is trying to push through, it doesn't make an exception for doctors, right? And then the messaging is that, you know, doctors, they make a lot, but doctors are pushing back saying that, hey, like, yes, we do make a lot higher than average, but it also comes with extensive years of debt, of schooling, and it's also a lot of responsibilities, right? Because we're talking about medical stuff. So if you mess up, then people die, and this is like a very serious kind of like, this is a very high amount of responsibility, of burden that is on the shoulders of these physicians. And it seems like the Liberal government is making life a lot more difficult, right? And just to wrap it up, just kind of my own pushback to it. I'm not sure if you guys know this, but I was chatting with the leader of what's called the Future Party of Canada. Is this guy who started this new political party. Basically, his message is that, hey, like, the Liberals suck, but the Conservatives suck too, because, like, you know, we're stuck in a American style two-party system, because the NDP isn't really going to win an election anytime soon. So we're de facto a two-party system, and both options suck. Like, this person, basically, he was like, I'm going to start a new party called the Future Party of Canada. And I think that was a really interesting idea. So I messaged him, and he asked me, like, hey, like, if you want to submit ideas on how to fix Canada or the future, or how to, you know, just move forward in like for the country, be sure to submit your idea. So I did. I made this like whole like 12-point plan. Maybe one day we'll go through it line by line, but we don't have time for that today. But I did just pull out an excerpt from my plan that I submitted to the Future Party. And this was point number 9. And this is in contrast to what the Liberal government is doing, because what I proposed was actually to cut the capital gains tax, and specifically to cut the capital gains tax, but only for investments into Canadian companies and Canadian bonds and stocks. So this is what I had to say. Okay, so Canadian companies often get overshadowed by American companies. I'm sure people here would know, right? Like, we as investors, I think the vast majority of our money is in American companies, right? So Canadian companies often get overshadowed by American companies. So the capital flies out of Canada into the hands of the American economy. So to fix that, for those who invest in the stock market, the typical Canadian investor most likely owns many American stocks. This causes capital outflows from Canada to the US. Again, I just mentioned that. The government can incentivize Canadians to keep more of their money in the Canadian economy by giving a capital gains tax break for those who are willing to make their money work in companies right here at home. So this is my idea: 50% capital gains tax cut. So, you know, for example, let's say if you invest in, I don't know, Loblaws, even though people hate Loblaws, but it's a Canadian company, right? If you decide to put your money into Loblaws instead of Walmart, then your capital gains will get taxed at an inclusion rate of 25% as opposed to 50%. If you decide to put your money in Walmart anyways, then you know, you don't get the tax break and you still pay the 50% capital gains inclusion. So this is my idea, and I think that we should really do something like this. But yeah, what I found for the what I saw in the budget, in the Liberal budget, is kind of going in the opposite direction of this, and this is what I really don't like. But I've said a lot. Let me toss the question back to you guys. What do you guys think about the criticism that the doctors have towards the Liberal budget? what do you think of my idea of implementing the capital gains tax cut for Canadian company investments? And what do you think about just, anything else about the budget in general or how to fix Canada? Just leaving it open.
Yeah, so with regards to your question with the doctors, right? So the doctors, a lot of them will presumably be operating as a company, I'm guessing, if they're like a practice. And as a result, they will be being more heavily taxed because of their the fact that they're basically considered a company. So I'm guessing that's probably why the main issue is coming from in that regard. And I think that's a pretty fair criticism. Oh, are you going to say something?
Yeah. So the issue, I think the crux of the issue is that not only are they operating as a company, it's like they're whenever they make money, that money they tend to invest it in things, right? So it's different than like income, where like if it's different than just having the corporate income by itself, because like you have to pay tax on corporate income as well, but it's like they pay the corporate income and then they invest the money, and then now you're jacking up the capital. They make capital gains on their investments, and now the government's jacking up their capital gains as well, right? So it's kind of like a double whammy, where it's like they still made income and they still pay taxes on that, but then like they're kind of hitting them again with the capital gains when they like take the money that they've already paid the income tax, the corporate income tax on, and then they invest it into stuff that goes up, and then they have to pay the capital gains, right? So it's kind of like a double whammy like that. So that's the issue.
Yeah, and to get into that, I think one of the big problems with doing something that would affect doctors in particular is that we already have a bit of a doctor crisis, and the doctors have a very easy avenue to go if Canada doesn't work with them, right? Like they can easily, or more easily, transition to the States, and that's already where a lot of our doctors are heading to. And if you want to keep the doctors around, you're going to have to do something to ensure that they are around. And raising their taxes is not gonna help them in that regard, and it's not going to incentivize them to stick around. And I found your idea of having people invest capital in Canadian stuff as like an interesting idea, because I think in a lot of regards, a lot of people would invest more heavily in Canadian companies, but I think that there still would be a significant amount of people who would invest in American companies, just because Canadian companies have a tendency to be pretty mediocre in terms of their performance compared to American ones. And so in that regard, I could see people investing more in Canadian companies, and then in order to get the tax break, and then that being something that encourages them. The only thing with that is that who is doing most of that investing, right? Like because obviously we are investors here, but I don't think the average Canadian is necessarily investing the way that we do. So would that benefit most of the Canadians, or would that just benefit whoever's managing the portfolios to determine what stocks they want to pick, and in the end result in maybe a worse performance because of the fact that they're investing in Canadian stocks for the tax break, but then the Canadian stocks underperform the American stocks. So, and then the company can, and then presumably a company or a bank or whatever could pass that down to their Canadian clientele, who are then now paying more money. And just because, and as a rule of thumb, reducing taxes on companies very rarely results in the companies passing that tax savings down on you, right? Like usually it's a scenario where they may not raise prices as quickly as they would have before, but they typically aren't gifting you the money back. So like and I don't want to necessarily get into like the carbon tax or anything right now, but like for example, if like we did axe the tax, don't expect Loblaws to cut its prices because we've axed the tax, right? None of these, like the companies aren't going to pass it back to us. So it's more of like a long-term growth perspective, that if we manage the taxes well, hopefully we can reduce the amount of flight from Canada to other countries, particularly the US. And I think raising the taxes is risky in this climate where the US is recovering rapidly compared to Canada, and Canada is kind of stagnating. Okay, if I'm in the scenario where I'm either in Canada or the US, and Canada has become increasingly risky because it's stagnating, the country's not doing as well, or I can go to the US where things are regaining speed. I think a lot of stuff will move to the States, and I think that's a big risk that the Liberals are taking with this. That being said, I do understand that we do need to tax in order to have some of the amenities that we enjoy here. I just think that this is part of a larger scheme of a budget that I don't think makes a ton of sense to me. I think that's kind of what it comes to too.
Yeah, before I pass it off to you, Dom, so let me just kind of maybe explain like my thought process behind, like, for example, like the 50% capital gains tax cut for Canadian companies, right? So yeah, I agree with what you said, Tristan. It's like you're not going to see an immediate effect, right? It's not like we implement this tax cut and then prices go down immediately. Like that's probably not going to happen. But I think what I'm concerned about is just how do we keep more money like in Canada, right? Because like, let's say you don't get it in terms of like, you don't get the benefit in terms of price cuts because the companies now have to pay less taxes, but they don't want to like cut their price, right? But what they might do is hire more people now that they have more money, so you get more jobs, right? So that's also a form of like helping out the economy. And like, yes, maybe rich people get richer, but we got to keep in mind like one person's spend is another person's income, right? So spending, once you get that money velocity going, I think that's going to be eventually the money will spread out, right? Like if the money is going to make its way throughout the entire economy. And again, none of this is going to be immediate, but I think that like long term, you're going to see like positive benefits to reducing taxes for businesses, right? And if you don't want to cut taxes for big corporations, then small business, start with the small businesses, right? What we talked about for like the doctors, for example, right? Those are small businesses. Maybe we can give them a tax cut, and like what the expert on the article said, like, hey, like right now there's no exception if you're a doctor. Maybe we should make an exception for doctors where they don't have to have their capital gains tax hiked because they're considered a small business, right? So yeah, basically, like, you guys ever seen that like that South Park episode? It's like Canada's at like the United Nations or something, and like people are asking like Canada, what does Canada want? Like, what does Canada want the rest of the world to help them do? And then the guy's like, you know what Canada needs? More money. And everyone's like, what do you mean more money? Where's the extra money going to come from? Like, more money from where? And then the guy's like, I don't know, just more money. Canada just needs more money. Right? Like, that's what I'm trying to figure out, right? I'm trying to figure out how to get us more money. Like, that's just the crux of the issue. Like, how does Canada get more money? And one thing that we can do is incentivize like money to stop outflowing to other countries like the US, who has already a stronger economy than us. So yeah, basically that's my thoughts. But let me pass it to you, Dom.
Okay. So I was taking a look at the article here, and I feel like in itself, it's already really tough for a lot of doctors and people who are trying to pursue like becoming a doctor. And like by doing like these complicated actions, I feel like it's like incentivizing less for people to want to be doctors. It's making it even more complicated, and it'll increase like the shortage, which is not really good in the long term. And like the current doctors right now have more of an incentive to want to go elsewhere, which is going to even like shorten the amount of doctors that we have here. So is this really the play? Like I don't necessarily think so, because um yeah, like the requirements of being a doctor is extremely tough, and limiting it and making it even like less incentive is just going to be worse in the long term. So I don't think this might necessarily be the play for that. And in terms of your like tax break, or like just keeping the money in Canada, I think that's a really cool idea. To be honest, I don't know how you thought of that in the first place. It was quite clever. And for that, I'm pretty towards it, just because I'll be honest, like I'm in VFE, right? I mean, yeah, I can buy it like with Canadian dollars, but that is like the S&P 500, right? Of like the United States companies. So I'm like guilty as charged. And if there was a way to like put my money into the Canadian market, and then inevitably with like your tax like idea, it becomes a lot more efficient for me to do that, then I would do it too, right? I wouldn't have to.
I mean, there's plenty of Canadian ETFs, right? But like you don't want to put money in them because it just chronically underperforms the S&P 500, right? So if we can't beat like the American indices on like performance, then we got to artificially kind of incentivize that performance to be more balanced, right? And how do we do that? Well, tax policy is one way to do it, right? I'm not saying that that's the only way to do it, but I think like if you even out the playing field a little by cutting taxes on Canadian investments, then you can make up for a lot of the underperformance just by charging less taxes on it in the first place, right? So yeah. Sorry, I cut you off, Dom.
No, it's cool. Yeah, I completely agree. But to like Tristan's end, it probably wouldn't be instant. It would take like a little while, much as like a lot of different things. But this too shall pass. I'm sure it'll fix itself. I had the chance to check out the Future Party, and I was just looking at their website and stuff. And this guy seems pretty young. He's like, let's change like the whole political system and fire memes. And like I thought that was pretty funny. So if you guys have a chance, there's a website for the Future Party. Just check it out if you can. As it's not a sponsored ad by the Future Party, by the way. But yeah, I had to check it out and see what it was all about. And yeah, pretty neat. Seems cool.
Yeah, I'm not 100% certain if I have too much more to add. I think there's a lot of schools of thoughts with regards to whether reducing taxes will or won't have a positive effect on like business coming back to a country, for instance, and if that money will even stay even if you lower the taxes. But I think Canada, we do need to do something because we're obviously lagging a lot of other countries. So I think it's definitely a difficult situation that we found ourselves in.
Yeah, I mean, last point, and maybe we gotta wrap up after this, but I have to make my displeasure very clear at our current liberal government. And again, I'm not trying to be partisan, but it's just like I would be equally as mad if this was a conservative government doing this stuff, right? And I just think everything that the Trudeau liberals have done recently is taking us further and further away from the pathway to growth and prosperity, right? In fact, like we're going the opposite. Not only are we not going down the pathway towards prosperity, we're going the opposite direction, right? So again, with what you guys brought up, it's like it's already hard enough being a doctor. Plenty of Canadian doctors just flee to America because they get higher pay there and better, better like cost of living and stuff like that. Because like, believe it or not, doctors also have to care about cost of living. And even though they make a lot, they have, again, student debts and all that stuff, right? So plenty of doctors, we have a big doctors shortage right now. On top of the housing shortage, we have a big doctors shortage as well. And if you don't believe me, just ask any Canadian who's trying to find a family doctor right now. You can't find one. And this is just, if you make the lives of doctors harder, how do you think that that's going to affect the doctors shortage? It's going to make it worse, right? And same thing with the housing crisis. Is like, part of this budget as well is increasing rental protections. And again, I don't want to sound heartless, right? I'm not saying that. I'm not advocating for like landlords being able to just arbitrarily evict anyone for any given reason. But all I'm saying is that if you make it harder for landlords to be landlords, if you make it super difficult to evict someone if they're not paying rent, or for just like if the landlord sees fit, like if the tenant is like kind of destroying their house or whatever, and the landlord wants to evict them, like if you make it hard for a landlord to be a landlord, and a lot of these liberal policies are super anti-landlord, right? You make it hard for landlords to be landlords, a lot of people might decide not to be landlords. And what do you think that's going to happen to, like, what do you think the effect of that is going to be on the housing supply, right? There's going to be less people that are willing to rent out their place, which means that the remaining places that are for rent are going to be like pricier, right? Because there's less supply. So a lot of these policies are about tackling, like sticking it to the rich. And like if you're rich, then if you're a doctor and you make like 3 times the amount of like median income as the Canadian, then we don't care how much like effort that you had to go through, because you're making so much, we're gonna tax you more. Because you're a landlord, we're gonna like make your life more difficult because landlords are the devil. Like all this stuff it's like fighting over the scraps, right? And it's not really expanding the pie for everyone. And I think it's just completely misguided, and we're going in the completely wrong direction. And I hope that in the next election, Canadians can be very clear-minded about these policies and the damage that they've been doing. And I hope that Canadians can make the right choice in just voting out this government, and hopefully whatever new government comes in can repeal these policies. But yeah, that's my rant of the day. So pass it off to you guys for some final thoughts, maybe.
Just to like clarify, I think we're generally like centrist, if not like liberals. It's just like historically the performance of our government over the past like 48 years hasn't been the best. So this is why we feel the way we feel. But yeah, just heads up. If it seems like a little like one side bias, we're pretty in the middle. So just a disclaimer.
Yeah, I was just gonna say, I think we're generally pretty middle to left leaning, honestly. It really comes down to the way that this government has handled the most recent situations, and the way that, and to be frank, it's mismanaged a lot of the situations, and they've introduced a lot of garbage to the overall political sphere. So like example, like all these Bill C11 and like Bill C18 and all this, in my opinion, garbage that has basically made it more difficult to consume content and all that jazz. Like the government has made so many errors in the last few years that I feel like they've lost the confidence of the Canadian people.
They've lost the mandate of heaven. Like the concept of the mandate of heaven, like the heavens themselves endow the emperor of China with like the right to rule. But then if there's like a famine, or if there's like some like a disease outbreak or something, or just like general chaos, then that means that like the gods have like turned their backs on the emperor, and it's time for a new emperor, and for the dynasty to end, right? So like I feel like this is like the Trudeau has lost the mandate of heaven, basically, is what I'm trying to say.
It's exactly that. Yeah,
I think that's the big problem, is they've really kind of just lost their way, I think. It's frustrating, because there is a lot of good things that they have in their mind. It's just their execution for everything has been absolutely terrible. And it's frustrating to see your country moving in such a path. So that's kind of where I'm at.
Yeah, that's true. And on that bombshell, it's time to end the show. Well, I pass it to you, Dom, for our outro.
Sure. So I hope you guys enjoyed today's video or podcast, and be sure to like, comment, and subscribe to this channel, as well as our Clips channel and all of our personal channels too as well. So with that being said, peace out, guys.
Have a good one.
Thanks for watching. See you next time.